Now, 2014, a rough year for hedge funds, with firms, on average, returning just 2%. Some of the passive funds did a little better than that, but that wasn't the case for activist investor Bill Ackman.
It certainly wasn't. He went from managing $11.5 billion to more than $18 billion last year, and that put his hedge fund at the top of Bloomberg Market's annual rankings. Now, we're joined by Bill Ackman, founder and CEO of Pershing Square Capital Management. Bill, great to have you on the program. Thank you so much for joining us. Give us a sense. You have $18 billion now. What's the next thing on your list? What are you looking at?
We're looking for what we normally look for, which is we're looking for very high-quality companies, usually very large businesses, dominant, simple, predictable, free cash flow generative companies that have, I guess as Buffett would describe, a moat around them. Brand, unique assets, long-term contracts, things that protect the business from new entrants. Businesses that are not exposed to commodity prices, fortunately. So that's what we're looking for, and we're looking for a business like that that's lost its way. Perhaps the costs are now out of line, they've not allocated capital effectively, they might have hidden assets that are misunderstood by the market, where we can buy a large stake and sit down with management and help make the business more successful.
So the question everybody's asking themselves is, what is Bill Ackman doing on this side of the pond, wearing a suit and a tie and not on vacation?
That's a good question. So I'm here because we took a company public here called Pershing Square Holdings, listed on Euronext. I think no one knows it actually exists, even though it has almost $7 billion of capital. It's the largest I think it was the largest IPO in Europe last year, interestingly enough, about a $2.7 billion IPO. But I would call it the best kept secret. If I came to you and I said we have a investment holding company with an 11-year record of compounding at 23%, compounding its equity at 23%. For 11 years, and you could buy it at a discount to book value, people would say, well, there must be something wrong. And in fact, Pershing Square Holdings today trades at about a 10% discount to book value. And if pro forma for the lower incentive fees of Pershing Square Holdings, it's part of a group of funds that have earned 23% for a long time.
Bill, I have a great piece of PR advice.
Please.
Buy a big company in the UK, make a bang, go after it, and people will know instantly about it. Is that something that you're thinking about?
We did look at Tesco, I'll have to admit that, but we've had our difficulties with retail and a lot of structural changes going on that make that a more difficult business. We look occasionally at companies in the UK.
When did you look at Tesco? In the last 6 months?
Yes.
Did you ring up Warren Buffett and ask his advice when you were looking at it?
No, but when Warren Buffett is giving up, there's got to be a lot of negative sentiment, but he's probably giving up for a good reason. But a lot of assets, etc. But we look on a very rare occasion. We were a shareholder of Cadbury prior to the Kraft deal, but other than that, we've done nothing here, and we've not been active in any way here.
No.
You sat down in the break and you said there's still plenty of opportunities at home. Do opportunities exist over here? It's just that there are enough over there and they keep you occupied.
Yeah, this is a time-consuming strategy. If you find yourself in a situation, in a proxy contest, again, the vast majority of what we do, we end up in a consensual arrangement with a board or a management team. But if it goes otherwise, it gets complicated if you have to get on a plane and spend your life away from home. So I think that causes us to focus a lot more on what's close to home.
Right.
Don't need a passport.
You know the directors better, you get a feel for the business better? Because it seems like opportunities in the UK may be more rife than actually in the US.
Actually, I'm not sure that's true. We have the benefit of, I would say, a very favorable governance environment where directors are much more attuned to what their shareholders have to say than they were 10 or 15 or 20 years ago. You have much larger companies generally, very big liquid stocks, so we can buy big stakes in companies. And then, of course, it's a shorter plane ride to go visit headquarters, and that I think is probably the biggest driver for us. So we really focus on the S&P 500, Canada to some extent, and that's really where we spent our time in the last 11 years.
Do you think that there are opportunities for activism over here? When I talk to money managers, and I remember sitting downstairs not that long ago listening to a bunch of managers saying activism doesn't work over here. These guys want to come over from the States and they want to influence management by the company. Don't take stakes and think that they can push us around. Is there a different attitude over here?
I'm not sure, because we haven't really tried at this point, but I would say what's interesting is large cap private equity in the U.S. is almost a business that's disappeared, and the reason for that, I think, is because of shareholder activism. If you're a shareholder of a company that's underperforming, your alternative was to sell the stock or hope that private equity would show up and buy the business. I think what's changed, and I think what's great about shareholder activism, is we'll buy 8 or 10% of a business. We won't tell the person selling that we're buying.
Yeah.
But after we own it, any value created goes to all of the shareholders. And the value that a private equity investor can create can also be created in the public markets. And we think many of the techniques used by private equity in terms of management change or cost structure or strategy change, capital structure change, no reason why the public shareholder shouldn't benefit. Why sell out at a 20% premium and leave multiples on the table?
Would be, we've invested in this management team already. We're pretty comfortable with what they're doing. We're investing in that management, and we put our money in good faith. Why should a guy who's owning 10% of the business come in and take a stake? That's the argument that gets articulated here.
I guess the argument I would make is we only step into situations where a business has underperformed its potential, and we don't know a shareholder who wouldn't want to see a business perform at its potential. So, and if you think about the ownership of corporate America, it's not that different from the ownership of corporate UK, right? The BlackRocks and Fidelities and Vanguards and their equivalents, own a pretty high percentage of the companies here. And I think investors are looking for returns. The kind of changes we make to businesses are not ones that create short-term value. They're ones that create enduring value, and I think they'll be supported by shareholders generally. But no plans to come to the UK?
Not yet.
Not yet.
But you did look at Tesco, so you may look at it again.
We did look at Tesco. It's true. We did.
Talk to us a little bit about some of the plans in the States then. You're invested in 3G, am I right?
I personally have an investment with 3G. These are people I have enormous respect for. That's on a personal side, but that's a tiny part of the vast majority of my investments are in Pershing Square. And we have an investment with 3G in that we own Restaurant Brands International, formerly Burger King. We own 11%. I guess now more like 8% of that company.
Before Christmas, you mentioned something about McDonald's needing to get shaken out. Is it something that you're looking at?
At this point, we're a Burger King shareholder. Burger King, I think, is taking very meaningful market share away from McDonald's. We have a lot of confidence in the Burger King management team. So I think it'd probably be unlikely for us to be competing with ourselves. And I think McDonald's stock is not cheap. I think the company has serious issues, but because there's a very strong balance sheet, pays almost a 4% dividend yield, I think that supports the stock price. So I think it's not as interesting because the dividend supports a value that I think is maybe not justified based on the current performance of the company.
When you're looking at the array of opportunities that are in front of you, how much are you thinking about the macro backdrop right now? Oil getting crushed, copper this morning down massively, treasuries back below 2%, and people are wondering whether the Fed raises rates this year at all. When you look at the economic story at the moment, what signals are you getting, and which ones in particular are you listening to? I
think it's very bullish for most industries and for the economy, right? You have a very unusual period of time where unemployment is heading down, is in the mid 5% range. You have GDP growing at a pretty nice clip. Yet you have long-term interest rates that are very low. So it's like an ideal environment for most of corporate America. Now, if you've got a lot of exposure to the energy sector, if you make drill bits, it's probably not a good time. But I think if you're, put aside, I think if energy prices were up, people would be complaining about the implications of high energy prices. So it's a huge boon to the American consumer. Right, and that feeds through into what kind of asset prices in particular? Feeds through to the vast majority of the economy. Right. So I think it's a very, very positive factor. I think the reason for some market disruption is more because of portfolio managers having energy exposure, being forced to reduce overall risk because they're losing money in a big chunk of their portfolio. And I think that does create some interesting opportunities where businesses that benefit by the lower energy prices become cheaper because of technical factors. Will there be opportunities in the energy sector? Do you know enough about that sector? Is that an area that you'd be looking at? There's going to be a lot of moving parts over the next 6 months as prices sort of feed through into the bottom line. My guess is that opportunities will appear. I'm not sure that we're the ones to pursue them. We spend most of our time looking at macro factors to determine which macro factors. We like businesses where energy prices can go up and down, and it won't have a material impact on the companies we own. So we look for these very, very resilient businesses. But getting back to my Pershing Square Holdings, perhaps that's why Pershing Square Holdings is trading at a discount. Can I give you a little pitch for Pershing Square Holdings while I'm using your time?
Go for it.
So I think it's one of the cheaper stocks out there. So you have a company, if you look at the universe of companies that have earned...
And it's cheap because people just haven't really realized the potential?
I think it's cheap for short-term technical factors.
Fine.
We took the business public about almost a little more than a quarter of the stock was bought by event-driven hedge funds September 30th. If you remember, October, a very difficult month for those funds. Most of those investors are exiting, causing an overhang of the stock. But the way I think about it is if you look at the universe of companies in the world that have earned 23% on equity over the last 11 years, there are about 300. Earned between 20 and 25%. You can type and figure this out on Bloomberg, in fact. And they trade at an average of something approaching high 2s times book value, 2.7, 2.8 times book value. You can buy Pershing Square Holdings at 0.9 times book value.
But Bill, you also had a great 2014, right, in terms of returns. How are you going to do that in 2015? I mean, are you looking at similar returns in 2015, or is that going to be impossible? You'll have to be pretty aggressive if you're going to repeat 2014.
So I'm not predicting, it's hard to predict short-term performance, but we are not traders. So we begin the year with 70% of the portfolio in investments that we're very likely to own over the course of the year, and about 30% in Allergan that's being acquired by activists. So we're going to have a large amount of cash that we take in the next, call it 6 weeks, 8 weeks, when this transaction closes. And I think a big driver of our returns this year will be a function of what we do with that capital. And we are scouring the North America, principally, for a place to put that capital. And if we can find some interesting new investments.
Big names?
Yeah, the focus is large companies.
Coca-Cola, Pepsi, perhaps? Not
a fan of Coca-Cola or Pepsi. I don't like sugar. I think it's bad for children and bad for people. So I don't like the fake sugar either. So I'm not a fan of either of those. Even though they're great companies, I don't like the product. So I like to invest in things where I like the product.
Okay.
Do you feel slightly that the boot is on the other foot when you have to come and explain why this company is worth more?
It's an interesting spot. But look, I think I feel an obligation to the investors who participated in the IPO for them to get the benefit of what they've purchased. I do think with the passage of time, as Pershing Square Holdings becomes a more publicly known entity. It's unusual in that the regulations in the U.S. prohibited us from taking Pershing Square Holdings in the U.S. You can't take a hedge fund public. So we had a choice of taking it public in London or taking it public in Amsterdam. And actually our first choice was the London Stock Exchange. But the London Stock Exchange said, you're a fund and we're going to put you on the specialist funds market. All the other funds are several hundred million market cap. This is almost 7 billion. Whereas on Euronext, we're on the list with Unilever. I think we're the 24th largest company on the Euronext. The theory was people are going to think about us more. I mean, it really is an investment holding company. We've chosen the closed-end fund structure because of favorable tax attributes.
But do you feel that you are... You're a guy that spends his time explaining to people why there's value in a business. How hard has it been to explain to people why there's value in this business?
Well, I'm just starting to do it. I did it on the roadshow. I think I was effective. We raised $2.7 billion of capital. Now I'm back in the UK to let people know that it's a bargain.
What's the feedback you're getting?
Feedback's been very, very favorable. I think most people don't know the entity exists.
Is that because they're not doing their work properly, or is it because you're not doing your work properly?
I blame it on us. We're restricted in the U.S. I can't go on Bloomberg in the United States and talk about Pershing Square Holdings. If I could, the natural buyer is a U.S. investor. So it's now interestingly. I think U.S. has favorable tailwinds from an economic point of view. I think it's a very favorable environment for shareholder activism. So for an investor who can only invest in European stocks, this is actually an interesting way to invest in the United States through a publicly listed liquid.
So U.S. investors that can only invest in Europe buying U.S. exposure?
I would say European investors who can only invest in Europe buying U.S. exposure. This is one of the few ways to do it, and you can invest in shareholder activism. It's quite transparent. We own 10 investments. You can figure out what they are over time.
Going back to the oil price, are you concerned about your stake in Canadian Pacific?
No, we think Canadian Pacific, we think the energy prices going down is probably neutral for Canadian Pacific. I mean, it has as much benefit for the company as, there will be less goods transported, probably less oil sands, less drilling, but this is one of the great industrial turnarounds ever. Management's done a fabulous job. There continues to be a very long runway. We've owned the company since.
Right, but if prices, what's your estimate for the price of oil? I know it's the big unknown, but if it stakes at $50 to $60,
Right.
it's a problem going forward.
It's not a problem for CP. I mean, CP makes less money from transporting oil than almost any other commodity. It's a relatively, it's single digits percentage of revenue. I think, the expectation is it's going to be part of the growth of the company going forward. So, does it have some impact on growth? But it's the least profitable growth that we have. And obviously, the benefits to the economy of energy prices being halved, I think, overwhelm. They make a lot more money on intermodal transportation, retail and businesses that are big beneficiaries than we'll lose in terms of at least our CEO's point of view.
I get the sense from you really see the U.S. economy as isolated at the moment. Does it feel that way? Over here, maybe not in the UK, but certainly elsewhere in Europe, it feels really doom and gloom at the moment. You could say the same thing about Japan. You're exuding quite a lot of confidence about the U.S. economy. Is it capable of being isolated from what else is happening and the problems that exist elsewhere?
I would say to some degree. I mean, one of the factors that really people are not talking about, if you want to get optimistic about America, just spend time talking to a venture capitalist. Right? The rate of new business formation and the rate of growth of companies that you've never heard of is probably the fastest ever in the history of the global economy. And there really is only one Silicon Valley. So I think that we have a number of attributes that are very, very favorable. Now, what's interesting in an economy performing as well as the U.S. is right now, and I think expected to perform, you'd normally see rates rise fairly quickly.
Yeah.
So the combination of very low cost of capital plus a meaningful improving economy is an unusual event. And I think stock prices, in light of that, are actually, attractive.
Apart from getting more PR from, for your firm,
what is the firm, for Pershing Square Holdings.
Square Holdings. What is your biggest concern for 2015?
In terms of my job, I need to find a place to put a big chunk of capital.
Yeah.
We've got $6 billion lying around, or soon to be lying around, and we'll find, or at least $4 billion, perhaps as much as $6. So we have to find a place to put that capital. We've always been able to find one or two new things. But there aren't. I do think it's a very favorable environment for what we do,
despite the volatility.
Volatility is a good thing,
as you say.
Right? If you're a long-term investor and you don't have margin leverage and your capital base is stable, then volatility is a positive.
All right, Bill. Thank you so much for joining us. Bill Ackman, there, CEO and founder of Pershing Square.